Hey there and welcome. Ever stop to think about who's actually on the other side of your Forex trade? I mean, we're talking about the biggest financial market on the planet. It's a total monster. So, who are the real players in this game? Okay, let's jump in and meet everyone from the titans at the top all the way down to the individual traders.
It's a really good question, right? Because when you're talking about a market this huge, it's definitely not just one type of person or group. It's more like this complex ecosystem, and believe me, there's a definite pecking order. So who's really at the top of the food chain? And where does everybody else, including us, fit into that picture? Well, that's exactly what we're about to unpack.
And to really get a handle on this battlefield, we're going to work our way down the ladder. We'll start right at the very top with the folks who have the most power and influence over the entire system. And at the absolute peak, we have the players that people sometimes call the puppet masters of the Forex market. I am talking, of course, about the central banks. Okay, so here's the key thing to get. Central banks aren't traders like you and me. They're not in it to turn a profit. Their whole job is to manage their country's economy. And they do that by controlling the big levers, things like interest rates and how much money is out there. By doing that, they basically set the fundamental value of their currency. You could say they literally set the rules of the game for everyone else. And yeah, we're talking about some very big, very familiar names here. You've got the US Federal Reserve, the Fed, the European Central Bank, and the Bank of England. These three are some of the biggest kahunas out there. And when they make a decision, it can send serious shockwaves through the entire global financial system. And they are definitely not passive observers. If a central bank thinks its currency is getting too strong or, too weak, it will step in. Sometimes this is a direct intervention, like buying or selling billions of dollars of currency. But other times, it's just verbal. A carefully worded statement from the head of the bank can be more than enough to send the market scrambling. All right, let's move one rung down the ladder. So right below the central banks, we find the heavyweight institutions. These are the players that are handling the vast majority of the day-to-day trading. Yeah, we're talking about the huge commercial banks, the household names you definitely know. And they get this awesome nickname, Flow Monsters, for a reason. It's because of the absolutely insane volume of Forex transactions they process, both for their big clients and for their own books. This whole playground they operate in, it's called the interbank market. And honestly, this is where the real exchange rates get hammered out. Now, what's really fascinating is just how competitive it is. Just look at this chart showing the market share between 2006 and 2016. You can see banks like Deutsche Bank, Citi, Barclays, JP Morgan just constantly duking it out for that #1 spot. It is a super high-stakes game played by institutions with incredibly deep pockets. But it's not just the old-school banks in this category anymore. We've got a new breed of heavyweight on the scene, the electronic liquidity providers. These are basically tech companies that live and die by speed and incredibly powerful algorithms. Their whole strategy is what's known as high-frequency trading, or HFT. And this breaks it down perfectly. What these firms do is use insane technology to scan the markets for these tiny, blink-and-you-miss-it price differences. Then, their super smart algorithms just fire off thousands of trades every single second to scoop up a tiny bit of profit on each one. It's all about volume and speed, and honestly, they're crucial for providing the liquidity that keeps the modern market humming along. Okay, so up to now, we've pretty much only talked about financial players, but there's another massive group in the Forex market that isn't in it to make trading profits at all. Let's talk about the corporate engine. Just think about any big multinational company, right? Say Apple sells a bunch of iPhones in Europe. They get paid in euros, but they've got to pay their employees back in California in US dollars. So what do? They have to use the Forex market. Their goal isn't speculation, it's just a fundamental part of doing business around the world, whether it's paying for parts or just managing their. And look, while their day-to-day trading might not be as huge as the big banks, they can still make massive waves. Just imagine a US company deciding to buy a German company for billions of euros. That one single deal, that M&A, requires a gigantic currency exchange that can absolutely send ripples and major fluctuations through the market. All right, last but certainly not least, we arrive at the biggest group of all, at least when you're talking about trading volume. Welcome to the world of speculators. So unlike a corporation, speculators have one very simple, very clear goal: make money from currencies going up or down. They're not trying to hedge the risk of their business or buy goods overseas. They are straight up placing bets on where they think the market is going to go next. And this is where it gets wild. Get ready for this number: Speculators, all of them combined, make up a mind-blowing 90% of all trading volume. Let that sink in. 9 out of every $10 traded in the Forex market is purely speculative. Now that might sound crazy, but all that speculation is what brings the massive liquidity that helps everyone figure out what the price should actually be.
Now, we can kind of split these speculators into two main buckets. On one side, you've got the big hedge funds and proprietary trading firms. People often call them the smart money. They're using incredibly complex strategies, algorithms, you name it. And on the other side, well, you've got us, retail traders. This group is everybody from the person just messing around on their phone to super dedicated full-time traders. And here's the thing. One single retail trader, by themselves, probably not going to move the market like a giant bank can. But the collective power, the collective sentiment of millions and millions of retail traders all around the world, oh yeah, that is a huge force to be reckoned with. That crowd sentiment can drive some really big market moves, especially in the short term, making retail traders a totally essential piece of this whole Forex puzzle. So as you can see, the Forex market is just this incredible, massive melting pot. You've got the central banks setting the grand policies, the huge institutions providing the liquidity, the corporations just trying to do business, and then speculators of every shape and size all trying to predict the future. Everyone has a different motive, a different goal, but they all meet right here on the same global battlefield. And to wrap all this up, I want to leave you with this killer quote from the legendary trader Larry Hite. It's just such a critical reminder, isn't it? That it doesn't matter who you are in this market, whether you're the biggest fund on the block or a retail trader just starting out, the psychological battle is exactly the same for everyone. Knowing who the players are, that's step one, but really, truly understanding yourself, now that's the real key to the whole game. It really makes you think, what is the hardest part of that personal challenge? Definitely something to chew on.